This is Tom Cloud with my bi-weekly update for FTM. I don't even know where to start. The questions have been incredible the last 2 weeks as we've seen the way we live and the way we invest and the way we do everything change dramatically due to the coronavirus situation. But what I want to try to do is jump right in and answer these questions that are coming in. It's really a joke right now about what the price of silver or gold is and what I had to pay for in a bid-ask situation. Somebody calls says silver is $14 and you're selling silver rounds for $17.50, $3.50 above spot when they're normally $1.35. That's correct. They're about $2 higher because the price of silver is down at 14. It was at 17. And there's nobody out there going to sell me silver. There's such a shortage of silver right now. It's unbelievable. And all I can do is tell you, in 2008, when silver dropped from $14 to $9 when the financial crisis started, and knowing that the government would bail it out, print money like crazy, and all the people that quietly came in the market end up watching silver go from $9 to $48. Now, granted, we all didn't get in at the bottom and out the top and wait too long to get out and all that. That's a different subject for a different day. But now we're looking at a severe shortage of physical silver at a time electric cars are ramping up. State of Florida's and Florida Electric power companies basing their future energy on solar panels that are a big consumer of silver. And yet, 4 weeks ago, I had a best special I've ever had in my career. I was selling junk silver at 19 cents over spot and paying the shipping, which is about 30 cents an ounce. Today, 7 wholesalers calling me to buy silver at $3 an ounce over spot, whether it's junk silver or whatever it is. They're paying me $3. I was selling to you for 19 cents less than a month ago for junk silver. So the reality is the paper market is crumbling. The paper market, if you don't have the real silver, you have nothing. A paper ETF is nothing. It's just a piece of paper. If things fell apart and they didn't deliver, they don't have the silver to deliver because they've leveraged up 1,000 ounces of silver 6 or 7 times in the future market. So you buy the silver, you pay the premium, you're going to hit a home run. We hit the highest ratio this week in history. Gold is now 115 times more valuable than silver. Some people think the normal rate's 36 to 1. I still think it's 50 to 1. And I think gold's going to go up. So I think silver's going to go way up. How in the world you can live in a financial crisis and not have hard assets is unbelievable. I was talking to a multimillionaire this week, and he said, you know, I'm glad you twist my arm to take a bigger position in gold because I talk to you every year about your opinion. And right now, as I'm talking to you on April the 1st, stock market's down 16.8% for this year, and gold's up 7%. 25% difference between gold. Now, granted, silver hasn't done anything because it is a industrial metal. And with this coronavirus thing and the slowdown in the economy and all the quarantining going on, you know, we're watching the economy fall. So silver needs the economy to be good to go up. But it's going to get good because we're going to print trillions and trillions and trillions of dollars. Let me give you one example. Since October the 1st, the federal government has brought in $3.5 trillion in taxes. We have spent $5.3 trillion through today. Go to usdebtclock.org. Go to usdebtclock.org. Go to usdebtclock.org and look at it. We're hitting 5.3 trillion. So we've got April, May, June, July, August to go in this fiscal year, and we're already $1 trillion $800 billion deficit. Where do you think they're going to print money the next few weeks? Have you watched the U.S. dollar this week? Get serious. It's gone from 123 a few days ago to 99.6 yesterday. The dollar's dropping like free fall. We're spending, China, that's 4 times bigger than we are, it's been a fraction on quantitative easing, printing money, giving everybody money. Yeah, it comes at a great expense. It's not that I'm telling us a bad idea. I'm just saying we can't afford it. Who's going to pay for it? I tell you who's going to win. The ones of us that have real money. Because the U.S. dollar is history. It is history. It's going to go all the way down to 72, in my opinion. It was at 123 just a few days ago. It's already gone below 100. And remember, for every 1%, it's going to go down 27% more, in my opinion. For every 1% it goes down, gold's going to go up 5 to 7%. But it probably never will make it that far because someone's going to come in before March of next year. We're hearing all over Asia, there's going to be a gold-backed currency, probably Chinese, probably a yuan. Doesn't mean to be completely backed by gold, but it'll be a gold-backed currency. Are you going to leave your money in the U.S. dollar? If you can buy yuan in a mutual fund and make 6 to 10% by just having your money out of the U.S. dollar. People, this deficit is going to skyrocket. We're talking about $2-3 trillion this year at least. We're looking at the printing of money going through a record that's never been seen in history. And if you're not buying gold and silver, you're making a huge mistake. It's got nothing to do with sales. You know, I'm getting on up there in age. I worry about you, my customer. We've been together, some of us, 44 years since I started this company. I'm turning 70 here in July. Started this company when I was 26 years old. So I can tell you, this ain't about me. This is about you. This is about what are you going to be in for the future. And whatever you want to do, you want to be diversified. You want stocks, bonds. You want gold. You want silver. You want some income-producing investments. You want some foreign currency in there. And that's going to play out as a yuan, in my opinion. So you want to diversify, but you need to up your percentage of hard assets. If it's 15% now, go to 20. If it's 30, go to 35. If it's 5, go to 10. But you need to up your assets because gold and silver are where the action's going to be. I've seen the run up in silver 2 times, and this one's going to make those 2 look bad. 1977 to 1980, silver went from $3 to $50, roughly speaking, in 3.5 years. Then between 2008, 2011, silver went from 9 to 48. This time, I think it started at 1180s. I told you a few weeks ago. It's at 14 right now. I think it's going to go to at least 75 and probably over 100. But you may have to wait a few months because you may have deflationary pressures on the economy and talk about recession unless we just keep printing astronomical amounts of money. So you've got to be ready to do that. Other emails coming in about the shortage and delays we have. The last 2 weeks have been the biggest 2 weeks in the history of this company. And yet people had to wait 3 to 5 weeks probably to get their goods. But remember, I'm one of the only ones, if not the only one I know of, your money never goes at risk. If you buy something, you send us a check. It stays in escrow until the vendor we bought it from has shipped it to you. And we have a tracking number. We then pay them. So your money never goes at risk. Stays with me the whole time. So we've got that. Yes, there are delays out there. And as I said, very little product for sale. The premiums are high. I think the premiums will go down as the price goes up, but it's going to take about a $20 rise in gold or a $2 rise in silver. You'd still be better off buying today while you can get in line to get the product and know that you're going to have it in less than 2 months. So I would still do that, based on that. We've talked about the deficit already at 1.9 trillion that was brought to attention by someone that heard me and started following the usdebtclock.org. But here's the killer. How about the debt to the GDP ratio? 20 years ago in 2000, the GDP, the gross domestic product, divided by the debt was 58% of the GDP. Today, it's 109%. The debt is higher than the GDP. There has never been a currency in the history of civilization that didn't crash when this happened. And the United States will not be the first. I can promise you that. It's just how long will it take? And in my opinion, if we look at things coming together, if you believe in Bible prophecy and you believe that the Bible prophecy will come true as so much has, there's nothing left to have to happen for this world to be raptured out of here if you're a Christian. But more than that is right now the US dollar. If we're going to live and we're going to tarry here for months and years to come, you're going to have to readjust your thinking. You may buy and sell things in dollar, but you don't want to hold your assets in dollar-denominated assets because the dollar is going to go to hell in a handbasket. I don't think there's anything else that I need to say except each one of you that are baby boomers my age that are rolling out of 401ks and starting 2 IRAs, a self-directed precious metals IRA and an IRA for stocks and bonds. So you want to have 2. And we can be your broker, we can be your representative. We cannot be your custodian. But if you'll give Dan Wright a call at 800-247-2812, 800-247-2812, we can walk you through how to get a custodian. The fastest growing part of our business are baby boomers rolling out, taking their 401k and making it into 2 self-directed IRAs. So if you have any questions on that, you can give us a call. And certainly if you have any questions about, even though we have a limited menu of products, we still have product which a lot of dealers don't have. But I have never seen the wholesale market, for the ones of you that heeded my platinum buy signal, there absolutely is no platinum. I don't have one wholesaler that has 1 ounce of platinum to sell me at any premium. Zero. I can't take a platinum order right now. The market's going to continue to tighten up. The size of sales here are the biggest they've ever been. Smart money is going to continue to build their hard asset portfolio to a higher position than it is now. The U.S. is going to continue to drop. We used to call it Bernanke helicopter Ben. He was dropping money from the sky in 08 to 11, keeping this economy from going under. This time there won't be enough helicopters or enough to keep giving families money for coronavirus. Not that it's a bad idea. I'm not here to discuss that. I'm here to talk about the financial, it's going to happen financially. So hopefully we've touched on the ratios, the deficit skyrocketing. It'll be the first $2 trillion deficit in this country in history. The ratio to GDP and debt is skyrocketing, and there's nothing relief in sight. We could spend an hour talking about what oil is plummeting, gas prices are plummeting. It's a major part of the U.S. economy. It's going to be very hard to overcome recessionary pressures. And even though we're looking at 0 rates, we've got negative rates right now, almost like Germany and other countries. We saw treasury rates last week at 0.00. Investors are willing to give the government their money to watch for no interest, just to think the almighty government would give their money back to them someday and it'd be worth the same thing. Well, if the government raised the money supply, we are good, and the dollar value goes down worldwide 3 to 5%, we know that's what you're losing by letting the government hold your money. Put into something that'll hold its value. So hopefully by the time we meet again in 2 weeks, we'll have a lot more information about how this economy is going, how the coronavirus is spreading, or has it hit the mountaintop and started to get better. But most of all, people, I would ask you to pray for each other. I'd ask you to pray for the families that are affected by this awful virus, by your family. Quarantine yourself to stay well during this, as we're all trying to do. But most of all, is just realize that things like this are going to happen. And it's how you come through it and the attitude you come through it with. Till 2 weeks from now, this is Tom Cloud signing out.